All right. Welcome back to another market recap and a look ahead. And of course, thank you for spending a bit of time on your weekend with me. Right, so I just want to get into it because there's a couple of things that caught my attention, and particularly what has happened in France. Now, I actually want to play this video. There were thousands upon thousands of protesters, pretty much storming the Bastille, the French Revolution. But at the end of the day, this is citizens being fed up with these tyrannical rules, in a sense where, the French government is forcing their people to get vaccinated. And if you're not vaccinated, you're not going to be allowed into shops, you're not going to be allowed into restaurants, workplaces, and so forth. And to the French people for standing up for themselves. So there's really two layers that I want to discuss why this has actually happened. And of course, the one layer is people standing up for their rights. They've had massive lockdown. A lot of people ended up losing their jobs and so forth. But, more restrictions on rights. So that's the one layer, but there's another layer underneath that I want to peel back and kind of like show where all of this is actually coming from, because it's deeper than just getting vaccinated or not getting vaccinated. And what was quite interesting to me is if we have a look at their jobless rate, it's sitting at about 8%. Now, that's higher than the US. And it's one of the highest in Europe, if I'm not mistaken. Spain's at about 15%, but they are registered as one of the highest. Italy's at about 9%, but they are registered as one of the highest in terms of jobless rates. Okay, and if we have a look at their retail sales, it's still fairly low. I mean, it's at 14%. Now, you're going to be mandating or forcing your citizens to get vaccinated. Otherwise, they're not going to be allowed into shops, retail shops. And, this is going to end up decimating their sales. I mean, this is a blatant attack on small to medium-sized enterprises. And, they're on their knees, what happened with the lockdowns worldwide. And now you're sticking in extra measures and further restrictions in place. And you're not helping these small to medium-sized businesses to grow. In fact, you're suffocating them even more. And a high unemployment rate and their retail sales is not that great. It's just a bad combination. I mean, even if you have a look at their government debt to GDP ratio, I mean, it's higher than the US actually. So it's just not conducive environment to be putting more restrictions on freedom of right. I mean, at the end of the day, businesses, restaurant owners, and so, I mean, they've got the right to serve whoever they bloody well please. And then you're going to tell them that they can't service a certain class of people just because they're not vaccinated. I mean, that is discrimination. So it's really pleasing and very impressive to see the people of France standing up for themselves, and they should. So let's just have a look at the markets. Right, so pretty much on the close on Friday, you pretty much got a bit of a red everywhere, almost a pan sell-off, what has occurred here, apart from crude oil. But I want to speak to this, why we've seen a bit of red. You got to remember last week, there were major companies reporting their earnings. And a lot of people, there's two sides to this. A lot of people were just taking their profits. Hence, you've seen a little bit of red, a bit of dip, just simple profit taking. On the other hand, the 10-year Treasury yield has dipped. The US dollar has actually got a little bit stronger. And that's not really great for the markets. Markets does not like a strong US dollar. It actually really prefers a weaker dollar itself. I believe that this could have been far worse. However, if it wasn't for crude oil. Now, typically crude oil does have a inverse correlation to the US dollar, but every now and again it does so happens that crude oil will be up and the US dollar will be up. But you got to look at it at a broader picture. So really the crude oil stopped all of this from being a lot worse than what you see. And this is just fractional losses. So what you need to look for in the coming week is particularly the US dollar and also that 10-year Treasury yield, because if the 10-year Treasury yield is going to slide down slightly slightly, and the US dollar is going to carry on with its strength. Depending on what crude oil does here, expect the markets to carry on being in red. But I do believe that the markets will actually go higher, to be honest with you. What is interesting, if you have a look at the VIX index, you'll see that it has slightly gone up. So this is also telling me, on the other hand, we've got a bit of fear trading that's happening, and a combination of all of that is why you're really seeing red. But this would have been far worse if it wasn't for crude oil. Okay, so I want to just quickly chat to Bitcoin. So Bitcoin has recovered really, really nicely, but there is going to be a little bit of resistance coming in. So we might just get that pullback itself and then retest again. There's something I really want to show you. I did a video round about May, about 2 months ago, round about May, and it was really diving into how fearful the market is right now with Bitcoin. Hence why I did this little symbol up there. The guy kind of being very fearful of Bitcoin. And I gave so many bullish indicators why it's a perfect time and why I'm getting in and accumulating quite a lot of Bitcoin. And go check it out, because there was a lot of bullish signs for that. And I've been proven correct. And let me show that to you. And you'll notice that the whales, these are your whales, and pretty much these are your plebs, your fishes, the everyday you and I's, if I can put it that way, right? And you can see that the everyday you and I's were very, very fearful, right? It's only now, round about June, that they started to accumulate going upwards. But this whole section really was quite a fearful state. A lot of people over here ended up getting quite liquidated. However, watch what the institutions were doing, what the whales were doing. So they're dumped, right? They were selling off, and watch, in May, they started accumulating, and hence why we started to get this really nice, you can see right here, they've been accumulating heavily, aggressively for the past 30 days, and while we get in a really nice recovery in terms of Bitcoin. But there's also another bullish indicator. This is the balance on exchange, on all exchanges that hold Bitcoin, and you can see that money has been moving out of the exchanges, and there's a direct correlation with regards to the price of Bitcoin. So in other words, the less Bitcoin is floating around in these exchanges and they're being hoarded, the price goes up. But if this trend maintains, expect Bitcoin to go up. Overall, I expect Bitcoin to go up. There's just enough bullish signs right now. All right, so that's just my market recap and a look ahead. And yeah, guys, be safe. This is Chris Trade. Peace.